Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Asian stocks and US futures turn negative after Democrats threaten to block a Republican spending bill, raising the prospect of a US government shutdown. Trade troubles roll on, with President Trump vowing a response to the EU's counter-tariffs. Canada and France both warning now of the economic impact. And Moscow's move. US negotiators head to Russia for talks on a ceasefire as Vladimir Putin visits Kursk, where his troops now have the upper hand. Happy Thursday. Volatility is back for these markets after the gains on the S&P of about 0.5% yesterday. The Nasdaq 100 closing higher by 1.1%. Futures now firmly in negative territory. The volatility as well around the domestic politics of the US, and we'll unpack that story for you in the next few minutes. Seems to be another headwind for these markets. European futures then pointing lower by 0.3%. FTSE 100 futures pointing down by 0.1% here in the UK. S&P futures after the gains of yesterday. Futures looking to wipe out all of that upside that was posted by the end of the close on the S&P 500. Nasdaq 100 futures also pointing low right now by 156 points. Let's flip the board and have a look across assets. The last time I checked, there was a little move lower in yields. We're seeing that again, 429 still on the benchmark 10-year. Yields just lower by 1 basis point. Yeah, producer prices out later today after CPI, consumer prices, came in more benign than expected. And that gave that lift and that rally to US equities yesterday. But as we see through the futures, that story is now starting to fade. Fed pricing still 2 for the rest of this year, closing in on 3, about 70 basis points. Euro dollar at 108, a little bit softer in the single currency. Brent at $70 a barrel, and gold at 2,938 in terms of the yellow metal, just up 0.1%. Some lines crossing now from the insurer over in Italy, Generali. Full year net income, this is the earnings story, 3.72 billion euros, just slightly below the estimate. So it's a miss in terms of net income for Generali. The estimates have been for 3.8 billion. Full year operating profit coming in essentially slightly higher, in fact, than the estimate, 7.3 billion euros. The estimates have been for 7.2 billion. So on the operating profit level, it is a modest beat for Generali. Looking for any lines on the dividend as well. Of course, the stock, by the way, up about 47% over the last 12 months. So the gains have come through for this stock. Will there be further upside? A bit of a mixed picture when it comes to the earnings story. Let's cross over right now to check in on the Asian session. Avril Hong standing by for us in Singapore. Avril.
Yeah, Tom, we're seeing as those U.S. futures slide, that's also playing out in the Asia-Pacific. A rebound earlier certainly didn't last. And this concern continues about tariffs, about a possible U.S. government shutdown. And it's really interesting to see amid all of this how Chinese stocks are not immune to the broader concerns. The Hang Seng is off potentially to its 5th session of declines. This might be its longest losing streak so far this trading year. And if you look at how the TAIEX is also part of those declines, a lot of this, as you know, is part of the chip sell-off, no thanks to TSMC. And it looks like there are also these macro implications. We're hearing from their central bank officials flagging currency risks amid the stock market outflows. Speaking of currency risks, let's flip the board and take a look at dollar yen, because we are less than a week to go to BOJ Day. Dollar yen has been moving lower. We've heard from Ueda-san in the past 2 days speaking in Parliament, so far not striking anything of a dovish tone, and this is even in the face of tariff uncertainty. So still looks like the bets of a hawkish hold are intact.
OK, bets on a hawkish hold for the BOJ still in place. Avril Hong in Singapore with a check on the Asian markets and a lens on the BOJ. Thank you. To the latest on tariffs then. President Trump says the US will respond to the European Union's countermeasures against his metals tariffs, raising the risk of further escalation in his global trade war.
When you put more tariffs on the EU, will you respond to their retaliation?
Of course I'm going to respond.
You will retaliate.
The problem is
tariffs.
Our country didn't respond. Look, the EU was set up in order to take advantage of the United States.
OK, OK, for more, let's bring in opening trade anchor Kriti Gupta. Kriti, another day of volatility around the tariff story. Where do things stand now?
Well, you can see that, of course, the European Union and Canada as well waited till the very last minute to put those counter-tariffs on. It's the minute that those tariffs were enacted yesterday, that's when the countermeasures came. And I think it really speaks this idea of how countries around the world are really tackling this idea of tariffs, to the point that Ursula von der Leyen just 24 hours ago actually said, we don't want to do this. Our feet are basically being held to the coals here. This is important as well, because that's just on the kind of policy front. There's a fiscal dynamic at play as well, as we know, with Germany kind of unleashing this fiscal spend as one consequence of this policy coming out of the States. The other is monetary policy. And I think this one's really interesting, because you are now seeing global central banks take a page out of Powell's playbook, not from 2025 or 2024, but all the way back from 2019, from Donald Trump's first administration. Let me put this into some context here, which is simply that back in 2019, when the tariff war under his first administration first kind of came to the forefront with China, the response from Jay Powell was an insurance rate cut. It was, let's get ahead of this because we're expecting these tit-for-tat tariffs to kind of slow the economy down. You are now seeing that same playbook being used, not just from the ECB, which is dealing with its own problems right here in the EU, but the likes of Canada as well. Take a listen to some of the commentary coming out of that central bank.
In recent months, the pervasive uncertainty created by continuously changing U.S. tariff threats have shaken business and consumer confidence. This is restraining household spending intentions and businesses' plans to hire and invest.
So there you are, Tiff Macklem talking about this uncertainty that's kind of plaguing not just the markets, but starting to seep into potentially what they're expecting is going to be an impact on the consumer. You're seeing that in the States. You're seeing that in the Beige Book. You are, of course, seeing that here across the EU as well, and right here in Europe. You're also seeing it in France. We're starting to look at growth concerns. You saw it in Spain as well, where in a lot of the data, they're preparing for a global pullback because of this reason. Yeah, so the economic impact is there. And, of course, the inflation dynamics are more challenging than they were back in 2019, making that central bank challenge more acute. On the politics of the US, suddenly, are we hurtling towards a government shutdown, or is this gamesmanship by the Democrats? It's funny because it's kind of coming back after maybe 6 months of us not paying attention at all to what's going on with the deficit. We should remind everyone that part of Donald Trump's kind of playbook here to really even get tariffs on board is to fund tax cuts for domestic American citizens, to balance the books and to make sure the deficit doesn't go even further wider. This is kind of the trade-off that he is trying to persuade. Step one of that is the tariff story. In the meantime, you're also dealing with plenty of shutdowns, one that we are no stranger to. Right now, the House has passed a kind of government shutdown bill. You're looking at a deadline that's coming up in 2 days on Saturday. It's a House Republican majority in the House. They've passed this bill, and they're saying this is going to take us through September. That is a couple months after that July deficit kind of ceiling. So you are looking to kick the can down the road. Chuck Schumer, who's, of course, a major player in the Democratic Party, of course, saying, hold on a second, maybe we should continue a procedural vote to kind of really extend funding till April 11th. This doesn't really change how the budget negotiations actually unfold. It just buys a little bit more time. The concerns around this, though, for the Republicans is that to pass the House bill in the Senate, you need 60 votes. Right now, they only have 53. The question is, can they convert some of the Democrats over to the Republican side and avert a shutdown in not only 2 days, but in the government or the Democratic plan, which is only a month away to April 11th. OK, so some tense politics then in Washington in the next few days as we count down to that deadline. Kriti Gupta, opening trade anchor, with the details there on the economic impact of tariffs and the potential risk of a shutdown in the US. Now, the market reaction after the US snapped 2 days of losses yesterday. Sentiment souring today as another US government shutdown, as we've been discussing, now potentially looms. Valerie Teitel on the risk in terms of these markets. It was risk on yesterday, Val, but what a turnaround already in terms of the sentiment. JP Morgan saying maybe the correction is starting to bottom. Maybe things are looking a little brighter. It doesn't feel that way right now when we look at the futures. Yeah, that's right, Tom. Risk is on a back foot today around these headlines of a U.S. government shutdown now back on the table. Now, I would note, Tom, we were quite excited yesterday. We thought maybe the bottom was in, and we have had some analysts stick their necks out there and actually
say the worst is over for the equity market. That being from J.P. Morgan out just a few hours ago. And they're blaming not growing risks of a U.S. recession, but they're actually blaming deleveraging by quant funds, deleveraging by hedge funds who were under a lot of pain in February. And that chimes with a lot of recent reporting we've had from these hedge fund returns saying Citadel and Millennium are very much licking wounds from losses in February. Maybe that's what's caused the equity slide in the last few sessions. Not anything really fundamental on recession risk, but just deleveraging from funds globally. There could be another jolt to the equity market today on the upside if we do get any confirmation in today's PPI reading of yesterday's soft CPI. I expect the equity markets to really like this. The CPI yesterday, Tom, all four components came in cooler than expected. We'll be looking for the confirmation of this in the PPI print so we can know the follow-on, what the PCE reading will be later this month.
OK, looking ahead to the producer prices, whether or not this is as good as it gets when it comes to inflation, given the tariff risk. Valerie Teitel, thank you very much indeed. With the market reaction to these sensitivities. Now to geopolitics, US officials heading to Russia for talks on a possible ceasefire with Ukraine after Kyiv agreed to that 30-day truce.
People are going to Russia right now as we speak, and hopefully we can get a ceasefire from Russia. And if we do, I think that would be 80% of the way to getting this horrible bloodbath finished. We haven't spoken to him yet with substance because we just found out and we just were able to get Ukraine to agree. So we're going to know very soon. I've gotten some positive messages, but a positive message means nothing.
OK, a positive message, but not necessarily concrete commitments from Putin yet. We'll see if that dynamic changes in the next 24 hours or so. Bloomberg understands President Putin will likely stretch out discussions to seek better terms in a show of determination. The Russian leaders, you can see in these pictures, visiting his troops in the Kursk region yesterday. That is part of Russian territory that, of course, Ukrainian forces have pushed into. Let's bring in Bloomberg's Oliver Crook now for the latest. Ollie, what will it take ultimately for Putin to agree on any deal? And what are the potential consequences from the Trump administration if they do drag their heels?
The problem is we don't really know what it would take to get Putin over the line on a ceasefire deal. And we also don't know many of the parameters that the Trump administration is judging the Russian reaction on, right? And these are basically very fundamental questions to our understanding of what could move this sort of this deal forward. We got sort of the first indication yesterday or the day before when you heard from Marco Rubio after that agreement was agreed to by the Ukrainians that basically Marco Rubio is saying that they really hope that the Russians get on board. But if they don't, basically they will know, the United States will know who the impediment to peace was. What we still don't know entirely is what the U.S. reaction would be to a rejection of this ceasefire by the Russians. But we began to get an idea from that from the President of the United States yesterday in the Oval Office. Have a listen to what Trump had to say about that. Not sure we've got the soundbite there, but basically saying that...
Yes, yesterday we have a full ceasefire. If it kicks in, we have to see. It's up to Russia now. There are things you could do that wouldn't be pleasant in a financial sense. I can do things financially that would be very bad for Russia. I don't want to do that because I want to get peace.
So really the focus appears to be from President Trump that it would be on the sort of financial dimension. But remember, Russia is already very sort of sanctioned by the United States and many others, but he could turn up the pressure potentially there. I think that there are also other ways, Tom, that this ceasefire proposal could fail. Maybe Russia's demands could be too great. And again, Tom, I think the other point that we need to make is the art of the ceasefire is very different from the art of the lasting peace deal. And we still don't know what the U.S. position will be on many of the things that the Russians demand, which is basically a reduction of the size of the armed forces of Ukraine, basically taking over all of those 4 eastern regions of Ukraine, which Russia does not fully occupy yet, legal recognition of that, basically barring the path for Ukraine to NATO. We don't know what the U.S. position is on a number of these, though they have, of course, said, the United States, that is, that they would probably have to give up territory and that NATO seems very unlikely. But again, this is a long path ahead still.
Yeah, indeed. Look, European leaders have not been involved in these talks directly, at least. Where is Europe right now in terms of their response to what is unfolding between Moscow, between Kyiv and between, of course, Washington?
So what we understand from the European reaction here, it has to do with the French and the UK really spearheading this effort, which has to do more with this sort of coalition of the willing, right? This is not just European forces, but it's basically trying to establish for the Trump presidency, the Trump administration, basically a menu of different options of what the Europeans are willing and the coalition of the willing, which is about 37 nations. This is not just European nations, some Commonwealth nations, Canada, Australia, Japan, South Korea, basically what ways they are willing to support Ukraine in a lasting measure. So that could be financial support, that could be hardware, military hardware. But of course, what they're also drawing up are plans for potential troop deployments within Ukraine and the nations that are willing to do that in the event of this sort of peace deal if it were to come to term. Of course, this is a sort of red line for the Russians. We've heard it from them. We also understand that a number of the nations, and I've spoken to a number of German officials, we've spoken to the Polish officials as well. These are some of the greatest defenders of Ukraine. They're very reticent to basically commit troops to going into Ukraine. So could maybe some of these troops be stationed in some of the eastern nations? Again, the problem that the Europeans have and the French and the UK have, from what I can gather, is that basically they're trying to draw up this menu of options for the Trump administration without really any clear directives of what the Trump administration wants. We know, broadly speaking, they want the Europeans to take a more sort of direct hand in security guarantees, but without more explicit guidance, they're sort of drawing up these plans in the dark and just waiting for basically what Trump's reaction will be.
OK, Oliver Crook, thank you very much indeed. A lack of clarity for European leaders, but as they attempt to push ahead with some kind of response when it comes to potential peacekeeping operations and options. Thank you. And with Ukraine expected to dominate the G7 foreign ministers' talks in Quebec later today, the EU's top diplomat, Kaja Kallas, will be speaking to Bloomberg's David Gura live on location. So you can catch that interview 5:30 p.m. London time. Switching focus right now, we have a redhead that crossed the terminal a couple of minutes ago on Budweiser and its APAC operations with a focus on China. The beer maker expected to cut additional jobs, potentially thousands. This is a result of a slowdown in demand in China. They are planning to cut thousands of jobs this year to reduce operational costs by about 15%. The company cut 16% of its employees last year. So Budweiser continuing to restructure, at least reduce headcount in the Chinese market on slowing consumer demand. They have a big operating project and plant in Guangdong province in the south of that region. That is a story we'll watch and a stock we'll watch at the open, 8 a.m. UK time. Coming up, Intel. So from drinks and beer to chip stocks, Intel getting a boost after the firm picks a chip veteran to be its new CEO. We bring you the details next. This is Bloomberg.
Season is here.
We'll see how the earnings stories managed to cut through the macro picture.
Bloomberg is first to break the numbers.
Earnings story coming through from UBS.
Crédit Agricole posting a fourth quarter profit.
Novo Nordisk, LVMH, ASML.
With the smartest insights.
Do you think the price to book number could go higher if Santander was a little bit smaller?
So we are only scratching the surface of our potential as a group.
Continuing coverage on Bloomberg. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. Happy Thursday. Intel has named Lip Bhutan as its next chief executive, entrusting a former board member and semiconductor veteran with one of the toughest jobs in the chip industry. Shares soaring in after-hours trade following the announcement. For more, let's bring in Robert Lee from our Bloomberg intelligence team. Rob, can the new CEO then, Lip Bun, can he actually turn things around? What is giving investors confidence at this point?
Well, I guess the stock price reaction, and again, context is everything. The stock's been trading at its relative lows. So it's a relief rally. It's removed the uncertainty. We've now got a new leader in place. So I guess that's positive. But whether we see a sustained rally in Intel stock price, depends on a number of different factors. And he has got a tough job ahead of him because the company has tried to diversify away from its core business in the PC sector, which is tied to PC sector, which is, as we've discussed previously, is an ex-growth industry. Intel's tried to diversify into the foundry sector, not really gained a lot of traction on that side. It's also previously tried to diversify into smartphones and handsets. So really, the new CEO needs to come up with a credible growth plan and, more importantly, execute on that. I would just say, by way of background, he was previously on the board until about August 2024, and also he's best known in the industry as the guy who turned around Cadence. Cadence is a semiconductor design tool company. He spent something like 12 or so years there. He was at the company for a lot longer in other roles. So, you know, he did a fantastic job there. Can he do the same at Intel? It's all for him to prove.
OK, so he has those turnaround credentials. Remind us of what the key challenges are. You touched on some of them, Rob, in terms of why Intel has struggled, why Pat Gelsinger, the former CEO, was unable to turn things around, dramatically implement structures and changes that will turn around the fortunes of this business. What's been the main headwinds for this company?
OK, how long have we got? But I'll try and keep it brief. I mean, their core business, their cash cow business, so again, maybe that's a positive because it's highly cash generative, is PCs. They are the majority supplier of processors to the PC market, the laptop market and the server market. But these are ex-growth markets, excluding the AI element of servers. So Intel, over really the best part of 20 or 25 years, has tried without a great deal of success to diversify into other growth markets. So that's the biggest challenge for them. Their main focus, and I think there is a leaked memo out there at the moment, the main focus, or recent focus I should say, has been on the foundry market. But as we know, that is dominated by TSMC. TSMC's market share in foundry is roughly 60% globally. They've got a technology lead. You know, Taiwan, that is one of Taiwan's key core strengths. So whilst Intel was previously the technology leader in the industry, they lost that lead to TSMC many years ago. So there is a huge challenge ahead of them. And as we know also, you know, high-end semiconductor fabrication is a very expensive business that is only going to get more expensive to maintain a position in. So I think they are likely to stick with the foundry strategy for now. Whether that is a good or a bad thing remains to be seen. But, you know, there's no easy answer for them. I think one alternative is that we could see a breakup of the company. We could see some partnerships or JVs, maybe even with TSMC, their potential competitor. There's a lot of strategic, options available. So until we get clarity, or the market gets clarity, I would doubt anybody is really going to declare that the worst of the trouble is really over for Intel. But at least we've got a new guy in charge. Let's wait and see what he says.
Yeah, new CEO, and we'll be watching, of course, to see what he manages to implement and when he can address some of those challenges that you outlined for us. Robert Lee from Bloomberg Intelligence, thank you. Later in the show, Walmart executives reportedly summoned by China over the retailer's calls for price cuts in the wake of tariffs. We have the details on that story next. This is Bloomberg. Now, some other stories making the news this Thursday. Bloomberg understands the US Federal Trade Commission, the FTC, is moving ahead with an antitrust probe of Microsoft that was opened in the waning days of the Biden administration. The Bloomberg scoop suggests President Trump's new FTC chair, Andrew Ferguson, is going to prioritize continued scrutiny of the tech giants. Bloomberg has also learned that HSBC is placing some of its investment bankers on short-term retention agreements. This as it winds down various businesses in a broad overhaul led by the London-based lender's new CEO. In some cases, the bankers are on 3 to 6 month work arrangements to finish client mandates across Europe, Asia and the Americas. And a SpaceX mission to rescue 2 astronauts stuck on the International Space Station has been delayed because of an issue with ground equipment. The crew were already seated in the capsule when the launch was cancelled less than an hour before liftoff. The mission to allow Butch Wilmore and Sunny Williams to return home has been rescheduled for Friday. Coming up, we're going to dive into the markets with Charu Chanana, Saxo's chief investment strategist. That is next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks and US futures turn negative after Democrats threaten to block a Republican spending bill, raising the prospect of a US government shutdown. Trade troubles roll on, with President Trump vowing a response to the EU's counter-tariffs. Canada and France both warning of the economic impact. And Moscow's move. US negotiators head to Russia for talks on a ceasefire as Vladimir Putin visits Kursk, where his troops now have the upper hand. Volatility then back across these markets after the gains of yesterday on the close on Wall Street. Gains of 0.5% for the S&P 500, gains of more than 1% for the Nasdaq 100, now being questioned by the futures picture, pointing significantly lower, particularly when you look at the Nasdaq 100. You're looking at losses there of almost 0.9%. European futures also in the water, down 0.3%, looking to lose 19 points so far as we build up to the open at 8 a.m. UK time. FTSE 100 futures pointing lower by about 0.1%. S&P futures then, after the gains of yesterday, now pointing lower by 0.5%. It was a more benign picture on inflation yesterday that led to the upside. Now question marks about a US shutdown, further threats when it comes to tariffs, and we look ahead to producer prices later today. Let's flip the board and have a look at what's happening in the Treasury market. You've seen that bid for US Treasuries, the safe haven move, and to some extent that continues today. You're seeing moves lower around 3 basis points on the 10-year, now 4.28 on the benchmark stateside. Euro dollar at 108, back below those 109 levels, just down 0.1%. Brent also a little softer in the session, down 0.3 at $70 a barrel, and gold still holding above the 2,900 level, up 0.1%. For more on these markets and how to position given the volatility, let's bring in Saxo's chief investment strategist, Charu Chanana. Charu, good morning. Thank you for joining us. When do you expect the volatility to ease? JP Morgan says the correction maybe is overdone now stateside. Do you align with that view that the recession risks potentially are being overplayed?
I mean, I would have to actually differ here, Tom. I mean, you know, obviously it's not just the recession risk. There's plenty of other things. There's this volatility around the tariff, news that's going on. The AI-driven momentum that we had seen in the markets for the last several years, that is being questioned, particularly in the US. So there are several themes that have got us where we are now. And to really, look for some of the turning points here, you really need to see that growth story in the US staying strong. So for that, at this point, I think you need evidence that tax cuts, deregulation, the kind of policies, the pro-growth policies that the markets had hoped for after Trump being elected as the president, they are really getting some traction here. We will have to see some more certainty, stability around the tariff policies. I don't see that happening for now. I mean, we are waiting for that April deadline to kick in for the tariffs as well, and we don't know where things are going to go from there on in terms of the retaliations. So I would say there's a lot of uncertainty. VIX is still below 30, so panic levels from a sentiment point of view are also not really at a level where I would see that this downturn is getting exhausted at the moment.
So specifically, you want to see a clearing of the slate when it comes to some of these uncertainties, and then concrete measures like tax cuts. That would be the signal, would it, Charu, that you would buy back into this market? That would be the signal that maybe the sell-off is coming to an end.
Absolutely. If I look at it on a tactical basis, I think, there is this diversification away from the U.S. story, which still has some legs. And to see that really being questioned, we need to see these concrete signs. I think one of the other signs that I would add to this is really a Fed put, I mean, yesterday we did see a softer inflation print, but one soft inflation print course, still above 3%. And the U.S. inflation picture broadly still spelling some of those growth concerns rather than that victory on inflation particularly. I don't think we are in all clear about the Fed really progressing with its rate cuts as well. So there's a lot of factors that can play into it. But yes, at least on the tariff front, that's one thing I would want to see a little bit more stability in terms of that, tit for tat moves that we've been seeing there for quite some time.
Yeah, and so far, to your point, so far we seem to be a long way from that stability on the tariff front. What does a Fed put look like, Charu? I mean, maybe this is as good as it gets when it comes to inflation, to your point. Markets pricing in about 70 basis points. What does the Fed put look like? Is it a change of language to focus on growth versus inflation? Is it pulling forward some of those bets? What does that Fed put sound like and look like for you?
To be very clear here, I mean, I do not think the Fed is in the driving seat right now for the markets, right? I mean, it is really the policies around fiscal initiatives and, what's happening again on the geopolitical as well as the tariff front. The Fed is obviously a key factor, and for them to really be more, accommodative, they need few more softer inflation prints, but I don't think that their rate cut move is going to be driven by inflation. I think it's going to be driven by the deterioration in the jobs picture, which again, I mean, we've seen the January number for jobs, and they have started to look a little bit, on a downtrend there as well. But again, even for the Fed policy to actually tilt more towards rate cuts, they also need clarity on the tariff front. So they are very much dependent on what happens on that side.
Does European outperformance versus US continue? How sustained is that story?
I would think, yes, tactically, like I said, the divergence away from US is a theme that still has legs. And of course, Europe and China continue to be the key beneficiaries of those trends. And for Europe's outperformance to continue, I mean, we've seen that with the defense sector really taking the lead there. But we need to see that outperformance really broaden out into some of the other sectors. Say, for example, the industrials, which will also potentially be the beneficiaries of the fiscal expansion that we're seeing in Germany, potentially the banks as well. So a lot of those factors, but my key concern with this outperformance of the European stocks is around, what happens if German yields, 10-year yields really rise above that 3% mark, and, how does that kind of play out for the equities?
OK, so we watch the yield story, strengthen the euro. Maybe that's a headwind for the corporate earnings. Back to the US, Charu, before we let you go, with the Mag 7 now on some metrics in correction territory, is this an opportunity for investors who may not have as much skin in the game around big tech to get exposure there? Or is there a risk of catching a falling knife?
I would think that the tech story, particularly the artificial intelligence story, is not going to be any more the all about Mag 7 as it has been in the past. So we really need to broaden our lens here, look at players which are actually showing some levels of monetization from AI enhancements, right? I mean, some parts of Mag 7 are doing that. We've seen Meta particularly being in the lead there. But if you look beyond the tech space particularly, there are other players like Walmart, which is showing, supply chain enhancements because of AI adaptability. So I don't think that the AI story or the tech story will be as narrow as it has been in the past.
Charu Chanana, Saxo, Chief Investment Strategist, always smart on these markets. Appreciate your insights and your time. Thank you. Let's get to a corporate story that ties in to the tariff pressure and is idiosyncratic, really, of how some of these players are adjusting and the potential pushback. US retailers under pressure, of course, to keep their customers spending. Some are trying to get their suppliers to bear the brunt of any tariffs. And in China, authorities have summoned executives from America's biggest retailer, Walmart. Yes, it has a big footprint in China, over reports the company is demanding price cuts from its Chinese suppliers. For more on this, we're joined by Bloomberg's Asia Global Business Managing Editor, Rachel Chung. Rachel, what do we know about, at this point, about the pressure being put on Walmart?
Right. I mean, it actually all really began with our own scoop. Bloomberg has been in front of the story the whole time. Our reporters talked to Chinese factories that supply Walmart, and they were essentially saying that, after the 2 consecutive rounds of tariffs that President Donald Trump has placed on Chinese exports, Walmart was coming to them and asking them to essentially absorb all of this additional increase. There's a lot of negotiation and resistance going on because we know that the margins are razor thin already for these Chinese suppliers because Walmart keeps a really tight lid on costs. So So, after our scoop came out, essentially 1 week later, news came out that the Chinese government was summoning Walmart executives to essentially explain why, in their words, they were bullying these Chinese businesses. And, how, the hypocrisy, there is a hypocrisy there, right? Because these extra costs are because of something that the American president has done, but the American business is asking Chinese businesses to bear these costs. So there's a lot of tension here, and there's a political dimension to it. And the stakes are quite high for Walmart in navigating this issue because, like you said, they have a huge business in China, and it's really important to them.
Rachel, how do you see this? How do you see this playing out then, longer term for Walmart and its prospects, and whether or not this is kind of the canary in the coal mine in terms of what this signals about other businesses caught in the pincer movement between China and the US?
Right, exactly. I think Walmart finds itself very much like it as that canary, as that test case right now. It has a very important business in China, is constantly negotiating with factories, but it's never really been in this moment of, geopolitical tension. We've seen that China really try to walk that line between being aggressive with its retaliation, but trying to be also quite conservative, not wanting to overreact, not wanting to damage businesses, big employers at a time where its own economy is so weak, right? So really, the Walmart thing is one of the few concrete things we've seen happen. They've banned Illumina, a biotech genetic sequencing company, from importing more machines. So that's quite a strong act against what's an American biotech company. I think with Walmart, it's just such an important business for China. So many Chinese consumers love Walmart. They've got hundreds of stores that really it's probably not going to get to a point where, Walmarts are closed in China, get out of the country. I think it's really more about putting the rhetoric out there, trying not to appear weak, especially to that Chinese domestic audience that doesn't want to feel like the US is pushing them around right now.
Yes, that would not be a good look, would it? So maybe more of a play around the domestic audience of China to address some of those concerns. Asia Global Business Managing Editor Rachel Chung, whose team, of course, broke that scoop, and we continue to monitor those dynamics. Rachel, thank you. Coming up, the rise of drone warfare. European tech startup Alpine Eagle secures new funding to develop its AI-powered counter-drone defence system. The company's CEO joins me next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, NATO is urging the EU and Turkey to improve relations to strengthen European defence. Turkey has emerged as a more prominent power broker and NATO linchpin as the US reconfigures its commitment to the European continent. Joining me now on the reporting is Bloomberg's Beryl Akman in Istanbul. Beryl, will Turkey's growing involvement in NATO make European leaders rethink Turkey's EU membership? Turkey has the military strength, it has battle-hardened soldiers, it's a crucial player. Does the EU really need to rethink its relationship ultimately with Turkey and Ankara?
I think just until a couple of weeks ago, Turkey's EU membership bid, a long-standing bid, was quite unthinkable to discuss with EU. But like you said, the US administration's foreign policy direction is definitely making EU officials revisit this bid and consider it more concretely. That was apparent yesterday in a press conference between Polish Prime Minister Donald Tusk and Turkish President Recep Tayyip Erdogan, with both leaders highlighting Turkey's importance and Polish Prime Minister particularly highlighting Turkey's defense capabilities. Now, Turkey is a NATO member and it has a second largest army in NATO. And under President Erdogan, it has grown its defense capabilities immensely. So I think there's definitely a revisit to that thought from European officials.
OK, so that's why it makes sense, maybe, for a closer relationship. What do we watch for then in the days and weeks ahead in terms of how this story could evolve?
So Bloomberg has reported that Turkey has held conversations, discussions on potentially sending, a mission, a peacekeeping mission to Ukraine. Turkey also said, President Erdogan has said that Turkey could play a role in helping broker peace talks between Russia and Ukraine as well, or be a home at least to these discussions. Certainly, in terms of its geographical location, it has typically straddled the east and the west, and in the past we've seen it play a key role in helping transfer Ukrainian grain to international markets. So we can definitely see Turkey taking a bigger role in the discussions moving forward, and maybe further ties with the EU.
OK, really consequential story. Thank you for the analysis. Bloomberg's Beryl Akman in Istanbul. Staying on the defence story, European defence tech startup Alpine has raised over 10 million euros in seed funding. It's going to be used to develop the world's first AI-powered counter-drone defence system. Military drone use, of course, has increased in recent years amid a resurgence of global conflicts, including, of course, most prominently in Ukraine. The market expected to grow potentially to nearly $57 billion by 2033. Joining me now, very pleased to say, is Jan-Hendrik Boelens, co-founder and CEO of Alpine, former Airbus chief engineer as well. So with that pedigree in the engineering and aeronautical space. Jan-Hendrik, thank you for your time. You've raised the capital. What is the gap that you are filling, you and the business, in the defence space of Europe, and how are you putting that money to play?
Yeah, good morning, Tom. Thanks for having me. What we're doing really different than everybody else is that everybody seems to be racing to build as many drones as possible. And what we at Alpine realized very, very early on was that the next logical step is going to be, how do we defend ourselves in this new environment with all these drones out there? And so we started building about 1.5 years ago our solution to defend against these drones, essentially.
And you work with the German military. Are you also working, have you signed any deals with the UK Defence Department, the Ministry of Defence here in the UK? Who else are you partnering with at the military level, and when do you deploy?
So we are working, of course, at a global scale. We are working with different MODs within Europe. Germany happens to be our launch customer. They've been very supportive in terms of getting us off the ground, essentially. And we've been able to deliver our system to the German military last year. Obviously, we're also active in Ukraine, which is proving a very important way to verify that our system actually works under real conditions. And as I said, we're, of course, also speaking with several other MODs within Europe and around the world.
Are you seeing the impact of higher spending, higher defence spending? Is that flowing to you?
Yes, absolutely. So especially in the last couple of weeks and months, we are seeing a huge demand. So this is really pretty much an industry that is now, especially in Europe, is really needing to ramp up, get its act together, and show that it can deliver. And of course, I think startups like Alpine are leading the way there. We are showing that we can build these capabilities at a very, very rapid speed. And the market is really there, the demand is there, and now it's all about delivering.
How do you think about sovereignty? Do you rely on US technology? Do you rely on US satellites? Should we trust US military capabilities right now? Should we trust US technology right now?
I think supply chains over the last decades have become very, very global. So that means that, of course, in every product, there are US parts, there are European parts, there are Chinese parts. And as you rightfully point out, I think there's going to be a lot of questions asked in the future about the supply chains. Where should we be sourcing our components? And I think as a European company working with European customers, we are very well positioned for that.
What should change when it comes to procurement, Jan-Hendrik? A lot of money going to the primes still, the big, of course, defence manufacturers. Does the procurement need to change to allow the startups in Europe to profit and grow?
Yes, absolutely. So there is definitely a good change that we're seeing with ministries of defence that want to buy off-the-shelf products. So now it's really all about creating this market for off-the-shelf products, making sure that actually startups get access to these markets. And at least from my point of view, I'm seeing a very, very positive trend there, that startups are getting access to these bigger spendings, to these defense markets. But definitely, we need to step on the accelerator. More money needs to be available, and it needs to be especially the procurement needs to work faster. There's still a lot of the old red tape around. There's still a lot of legislation about how these contracts are to put in place, how they are to be tendered, and we are still very much standing on the brake. The other thing, particular to Europe, is that we still have a lot of legacy of ESG regulations, and I think we need to work very, very hard to make sure that we loosen these up, to recognize that as part of a sustainable society, we also need defense spending. And up till now, this is essentially left ambiguous within Europe, which makes it very hard for a lot of parties to invest in defense. And I think that is the single biggest break that we have in Europe at the moment.
OK, those are some of the challenges that Europe needs to work through. Jan-Hendrik, Boelens, co-founder and CEO of Alpine Eagle. Really appreciate your time after raising $10.2 million in additional funding. Former Airbus chief engineer with that experience and the defence capabilities in Europe. Plenty more coming up. Stay with us. This is Bloomberg.
So I think they will be reducing policy rates. You would at least want to get back to neutral. This kind of intellectual development of this idea that, yeah, you can have some months where you're running at 2.5% inflation, slightly above the target if you think it's a one-time movement.
The economy is not Houdini. It just doesn't disappear that fast. We are starting from a good place, from labor market, from inflation, at least not going higher.
So if you talk to economists, they'll tell you looking back, it's good news. Looking forward, there's very little information content.
I do think we'll probably end up with more than one rate cut this year. The weaker the economy gets, the more likely it is that we're going to see even more fiscal stimulus kick in next year. So we've got a deteriorating fiscal situation here, and slow economic growth and tariffs will only make it worse.
Bloomberg gets reacting to the latest US CPI print, coming in the softest level that we've seen in 4 months. We have producer prices later today. The core story around CPI was also more benign than had been expected, and that turned in and fed into the gains that we saw across US equities yesterday, though that story, of course, is being rewritten as we speak. And as John Author says in his latest column out today, maybe this is as good as it gets when it comes to inflation out of the US. We watch that story and the impacts, of course, on Fed pricing, because what this did yesterday for the equities markets was kept the hopes alive that the Fed can continue to cut. Let's flip the board and have a look at how that pricing has adjusted. About 70 basis points, 71 basis points now priced in. So 2 fully, closing into 3 25 basis points cut for this Federal Reserve. We'll see what producer prices does to that later today. Let's flip the board and have a look at how to hedge in this environment then, with all the volatility and trade tariff angst that is rippling through these markets and question marks still about central bank policy. Potentially, gold is not where you want to be looking. It hasn't broken through that 3,000 level. It's had an amazing run-up, of course, in the last 12 months. But what you're seeing, actually, is that the euro and the yen, these are the yellow and blue lines, yellow being yen, blue being euro, have actually gained and performed better as a hedging function than gold has. The higher yield story, of course, from JGBs in Japan, the higher yield story in Europe as well on the defence spend supporting those currencies. Just think about that in terms of how you hedge. Gold not maybe performing as some would have expected in this volatile environment. Flip the board briefly and have a look in terms of how this is all tying in as well into the correlation that's now breaking down between bonds and equities. You'd seen that correlation at the start of the year, but from late Feb, bonds have returned on aggregate about 1% versus the S&P 500, which is down about 9%. So that's good for that 60-40 portfolio. That is a story. We'll see if that continues to adjust into the session today and through the rest of this week. Don't miss, by the way, our interview with the US Commerce Secretary Howard Lutnick. That's at midday London time. The opening trade, though, is up next. This is Bloomberg.